The content discussed in this podcast is for informational and educational purposes only and should not be construed as financial or mortgage advice. Always consult with a licensed professional before making any decisions regarding mortgages or financial matters.
Welcome to the Canadian Mortgage Show. Here are mortgage professionals Alex Pang and Alex Shanks to cut through the BS and educate Canadians on all things mortgages and real estate.
Welcome to another episode of the Canadian Mortgage Show. This is episode 22. Alex Pang here alongside my co-host Alex Shanks. Alex, how you doing?
I'm doing pretty good, man. I will tell you this. I'm on day 4 of a cleanse. So if I get a little snippy, a little angry, it might be because I haven't really been eating food. It's nothing against you. It's just I've been eating salad and fruit for the last 4 days.
Okay, so have you been walking by anybody with McDonald's and like that cartoon with you follow the smell and you float towards the smell? Has that happened?
It's my son's 6th birthday today. We had a party. The night before that, we had cake and everything, and that was horrible. We're at a family dinner, 3 different types of cakes, but I held strong, man. I was able to say no to the food.
Couldn't you just give a cheat day or something? I'm just going to have this for this and that's it? Or you had to...
For cleanse is a little bit different. A cleanse is like where you like need to detox the system fully. Okay. So it's not, if I was already like, I was in the detox mode. If I cheated on that, it pretty much ruined the entire thing. So it's not the same as a diet.
In other words, you didn't time it properly because you know your kid's birthday's coming up and you're like, oh, shoot, I know. That 4 days is leading into it.
I already told them that, hey, buddy, I missed having that cake with you. I guess we're going to have to get some ice cream cake for the weekend here as well. So it's all good.
Okay. So as soon as your cleanse is done, then it's like Garfield then, right?
Oh yeah, exactly. Yeah. Just gonna shock the system and be like, what? You were just so healthy. What did you do to me?
Essentially, you're just going to cancel it out then, right?
Yeah. No, I'm not going to go too crazy, but I will be eating some ice cream cake and probably a burger this weekend.
Nice. Yeah. For us, it's Lunar New Year. Happy Lunar New Year to everyone listening out there. I actually collected some red packages this week, so I thought I'd be giving it away, being the married person. We were handing it out at dinner at the restaurant, and my wife's uncle was passing it around and passing it to the kids, and then I was pretending to get ready. I don't know if, but as Asian folk, when we receive with 2 hands, not just like a one-hand thing. So I was wondering what the reason why behind this, and I asked some people. The reason is when you accept with 2 hands, it's because your attention is to the person.
Yeah, so, focus on them.
So it totally shows that you're paying respects, essentially.
Yeah.
So my wife's uncle hands me a couple red packages, and I'm like, yes! And I let out a big scream, and everyone in the restaurant turned around and looked at me. So I was just like a kid in a candy store. Didn't expect it, but I got something. I'm like, score.
Nice.
So
nice. Perfect.
Yeah.
And then what are you meant to do? What's when you get that money, you say if you're a kid or now, are you meant to do something special with it? Or is it just, hey, you get to enjoy it?
It's you get to enjoy it. It's not, I think what happens is, I think what you're referring to is when people get married and they receive something, they're supposed to, I don't know what the tradition is. You're supposed to spend a little bit. Oh, I think it's, what? I think it's a funeral. When you get something, you're supposed to spend it before you go home. That's the thing. And then usually the red packages are $1. And so you are supposed to go to the store, buy a piece of gum or whatever. I'm not as crazy into the tradition, but I could be wrong. So any listeners, if I'm wrong, please write in, correct me. Okay. So we got a jam-packed show. We should get right into it, right, Alex?
Yeah, let's do it. We obviously, this episode is coming out and we got the Bank of Canada. They dropped rates by that 0.25. Now, this brings the key lending rate to the 3%. This does not mean interest rates. Does not mean interest rates, people. That is the overnight lending rate that the Bank of Canada, they lend out to the other banks for their money. Now, we'll get into this, Alex, but I don't know. What was your thoughts? Honestly, I don't know if this drop was needed. I don't know if they should have waited, should have done this one. What's your thoughts?
Yeah, I think this was based on the numbers and the stats and all the reports that traditionally they follow to make these kind of decisions. It was widely expected, so it wasn't a surprise. So it wasn't, they shouldn't have done this. Based on traditional thinking, yes, they should have done it. So that was an easy thing. Now, what happens after this week is the biggest thing. And the whole thing with Trump and tariffs and how we respond and all that stuff. We can talk about this all episode.
And that's where, to me, my thought was like, they could have waited this one to see what's going to go on. And we're going to be talking about this. Trump did impose tariffs. Those are going to be coming here for us. And should we have waited, seen what's happened? The Bank of Canada seems to be very reactive. They are doing these things. If we go back to COVID, rates dropping. Hey, we saw inflation going up. They said it was transitory. It was not transitory. We then skyrocket the rates. And then even last year, we didn't think rates were going to come down as aggressively. Our economy's doing crap and rates have come down aggressively. It's just like, why don't we take like a beat? Like, all right, we've been dropping rates. Let's just take a minute and then we'll drop it again in March if we have to.
Yeah, we finished the last 5 years of a yo, and hey, we might experience another yo again, and we're going to talk about this. But let's finish off here on this part with rates going down 0.25%. That means prime rate is down to 5.2 now. So that means variable rates are improving, and we're in the period, we're in the line now where variable rates are around the same as fixed rates, 3 to 5 year fixed rates. We haven't seen that in the last 3 years. So we're cresting the point where once variable becomes fixed again, that's where traditionally it should be, because variable, you as a borrower is taking on the risk, whereas fixed, the risk is with the bank. Yeah, we're slowly returning to historical norms in terms of the spread in between. Now, like I said before, the forecast moving forward is more muddy. So my opinion is, yes, they should have made the cut this time, but I'm not so sure the rest of the year now. Before we start the yearly forecast, we're like, okay, we'll probably drop maybe 0.75 to 1% this year. But guess who the wild card is? Mr. Donald J. Trump comes in. We don't know if what he's spewing is just rhetoric. Is he joking? Is he serious? Is he just making empty threats? But as a society, not just Canada, but other countries in the world, I guess we have to take those threats seriously.
If we look at the power of social media and stuff, like controlling like stocks and everything, like the people's words have power, and him talking about stuff, like it scares the entire markets. Let's go and talk about what happened to the NVIDIA stock. It dropped. I can't remember the exact amount. It lost like $1 billion, the largest drop that it's ever been in the US history, all because of a stock in China that is going to overtake AI. And it cost them right? It cost them $5.5 million to build the same thing that OpenAI cost $500 billion.
Well, it's funny that you mentioned NVIDIA, because we were actually considering investing in NVIDIA. Because we have invested in Tesla, and ever since the whole are you a Nazi kind of thing with the whole that kind of sign thing, my wife was talking to us because the kids have invested in there. And they're like, oh, maybe we should sell Tesla and everything. And then my son was talking about NVIDIA, and I'm like, oh, NVIDIA, I think they make chips, right? CPUs and stuff like that. So we're looking into that. All of a sudden, it went down a lot. And then I hear all about all this DeepSeek stuff, and like how one small company as NVIDIA lost, what was it, like 18% market share in one day or over the course of a week?
It was. Yeah, I can't remember the numbers, but it was massive. It was a big loss, and that's again, just like the news can shift stuff so quickly. And that's why, again, Alex and I are here on a weekly basis, but sometimes like we even can't get to the news fast enough to even talk about what's going on.
Yeah, exactly. We're only here to talk about it, and let's just hash it out. We don't have the answers, but let's say, hey, what does this mean for you and I? With all this stuff with Trump's tariffs coming in, you would think we would have a government ready, mobilized, ready to respond, right? Ready to bring the troops together and let's talk about it. How do we strategize? How do we respond? Guess what? Government is prorogued, i.e. suspended until March 24th. So we can't even strategize an appropriate response. We're essentially defenseless right now, right?
It's a joke. Like it is to me, it's just like this, but to me, this is where like all parties should be like, you know what? We're not talking about who's prime minister. We're not talking about anything. We just care about Canada right now. That's where all of them should be like, we're not worried about all the other political stuff. We just want to make sure that Canada is going to keep surviving and thriving.
Yeah. And because Trudeau is resigning, so even if he tries to talk to Trump, I'm like, Trump's not going to take him seriously. We have no liberal leader, i.e. the next interim prime minister in the meantime. So the provinces, the premiers have been left to do it. Like we've heard Danielle Smith do it, talk to Trump, flew to Mar-a-Lago, and I believe she attended the inauguration too, I think.
I know. She said, hey, tariffs are coming, even though that they talked like, hey, they're not going to come. She was pretty much, based on our conversation, it's coming.
Yeah, and then at the same time, I'm hearing Doug Ford also putting his foot down and be like, hey, we're going to fight back on this. All because our prime minister is MIA, our government is MIA. Let's bring it back together and unite as a country, people.
Yeah, and I'm gonna throw some shade at the conservatives as well. It's like, why aren't they standing up and fighting against this? Like, where's their fight? Let's say Pierre Poilievre. Like, what? Where's their fight? Where's Jagmeet? Like, where's all these people that are meant to be the top dogs in the power? Like, why are they not showing fight right now? Because I feel like they're just all trying to show save face to be like, who's gonna be the next prime minister? I don't really give a shit about that right now.
Yeah, yeah. It's right now, it's just a mess right now. As far as by the time you guys listen to the pod, the tariffs are in act right now. So what is
Yep.
it going to mean? Like, how much is it going to affect us? What's going to be exempt? I know we have our officials still lobbying the Trump administration to see if we can come to a resolution and such. And
Yeah.
this is like a evolving thing as we go. We're talking about this now, but it could change by the time we're done this episode.
Yeah, it came out today. We are the 30th on Thursday, and it came out that Trump signed the order. It's happening on February 1st for the 25% to Canada and Mexico. Now, what he has said right now is he hasn't included oil yet. He doesn't know what he's going to do. When he talks,
He
about
wants
it,
our
maybe I
oil.
will,
That's
maybe I
why.
won't.
Yeah.
And then the other thing is, I said, we might have to increase them. We'll start at 25%, but maybe we'll go higher. Now, I think the biggest one that really affects everything will be oil. That is the biggest one. The other stuff is going to be having massive impacts. Like, we'll talk about what's it going to do for all the other industries. But if anything happens to oil for Canada, that's like, we're in a world of hurt.
Yeah, we're in deep doo because we are a resource rich country, but yet why aren't we in a better position as a nation? Like, whatever system or whatever infrastructure we have in place is not working for us. And
yeah, and we can't do anything. There's nothing. It's not like we can turn on a switch and be like, all right, we're going to turn our refineries back on. It's like we have nothing ready and we can't do anything. It would be, holy shit,
to make any infrastructure change, of course, traditionally it takes years of studies, right? Study after study costs millions of dollars. And when finally something happens, it might take 5, 10, 15, 20 years for something to happen. Yeah, this is more of a systemic, almost like changing the constitution kind of thing.
Let's look at China. Let's go with COVID, like how they built a full hospital in a week with everything. You see those ones where they have avalanches, they build a bridge within 2 days. This stuff can happen fast. We just make it not happen fast.
Yeah, it's just too much bureaucracy and all that stuff. It helps that China has 1.8 billion people, so you got people ready and willing. But at the same time, it just goes to show when you need to do something, let's not get mired in all this talking back and forth about what you do. Just do something.
Yeah.
Right.
And there's definitely times that it's worth talking, and there's times not. And this is one that, like, tariffs affect all across Canada. Now, I want to make people realize, like, the tariffs don't, like, directly, like, we don't pay more. The Canadians don't pay more. Like, we still buy the same stuff, but it's the Americans that are going to be buying our goods in the US that have to pay more now. They're going to be paying 25% more, meaning why are they going to buy our stuff and not just buy stuff local? Which, I mean, hey, I understand Trump, he's bumping up his country, which is, hey, fair enough. But we know that we sell pretty much, I think, 80% of all the vehicles to the USA out of Ottawa or out of Ontario. And so what, they're not going to buy our cars because they're going to say either you have to drop your price or we can't afford it now.
Yeah. No, we've heard already that we are planning to fight back because most of the oil is in Alberta. Plan to fight back against the tariffs by cutting off all energy supplies to the U.S. in February. Good on you, Danielle Smith. Hey, thank you if Trudeau and the Liberals are not going to fight for us, hey, at least you're fighting for the province, i.e. helping us as well. Same thing with Doug Ford. How do you think these tariffs will affect the real estate in the housing? Do you think it'll have an effect there?
I would say I don't see prices dropping because of it, but I for sure see prices not increasing. We talked about before, okay, I said 2 to 3%. You said about 3 to 5% for increasing. That means more like we're leveling off, which, hey, home prices not increasing, like that's not end of the world. Our country is a lot more than just real estate, but everything is built on real estate at the moment. And so I don't think that's end of the world, but people are going to be scared. I talked to a lot of people today that were freaking out. Oh my God, the tariffs are coming in. We need to do this right now. And so, whoa, let's just take a beat. We do not have the data right now. Let's figure out what's happening. There's nothing that is telling us that rates are going to go to 10% today.
Yeah. And home prices is usually a function of society, right? If home prices go up, Usually it's during COVID, when money was flooding the market and people felt wealthier, having more money, buying more stuff, more demand pushes up prices. When home prices go down, it's a function of, hey, people are losing their jobs, interest rates are too high, all that stuff. And that affects home prices. So how the rest of the year goes really depends on the next couple of months. I guess even the rest of this year, if the tariffs are actually going to come and by how much and how we're going to respond to it.
And that's what I mean.
Yeah.
Let's talk about, this is the one that I just don't love at all. Ottawa planning pandemic level relief for workers for the businesses with Trump imposing these. Now, this was talked about before these were actually imposed. And this is just insane. How have we not learned? And hey, we need to make sure there's stuff there for businesses. But holy shit, if they come out with a CERB thing again, where you can just get instant money.
Oh my gosh.
I don't even know what I would say.
Yeah. Even us in BC, our Premier David Eby, he said the same thing. He supported it. So let's look back 5 years ago. What happened? Okay. COVID happened. The government opened up the coffers, essentially borrowed money to flood the market with money. So we had CERB, we had CEBA for businesses. We had huge interest rate cuts, right? Because to respond to this, essentially the world shutting down, and they wanted to keep the money flowing. So rates at the time for mortgages was 3.5%, 4%. It dropped to 1.5%, 2%. And do you remember at one point we had variable at 0.99? One lender out there had the variable at 0.99. And that probably lasted maybe not that long.
No, but the thing is, a lot, like, especially with the CERB, we couldn't qualify people on CERB. If you lost your job, you couldn't qualify that way. But all the companies that got CEBA loans and all the big companies in the country that got funding from the government, a lot of people kept their job. They all started working remotely. And so they all could still qualify for mortgages. No one really lost their jobs. It wasn't like a massive layoff that happened. It was like 2 weeks that was scary. But it's like, we did all this stuff and it's meant people didn't really lose their jobs in the same way.
Oh yeah. And the time when they essentially opened up the tabs for CERB, there was no oversight, like who should get it, who should not. We'll figure it out later. We'll just toss up the money and everyone catch, right?
They already had a system in place for EI. Could have left it that, saying, hey, it's going to that. You still have to go through the system. We got to figure it out. And hey, could have done like a $2,000 check, like given enough for people that did lose their job that way. But it's okay. There's people now that owe 20, 30, 40,000. They're never going to be paying it back. And like the government's now coming after people that probably shouldn't have had it, but they signed up because it was so easy for them.
Oh yeah, there was they just left it up to the honor system for people to do. And we like to think that people are good and honest, but not everyone is. And and we've heard cases where even CRA employees was claiming CEBA and took CEBA. And then when they found out, they fired, what was it, like 50, 60 CRA employees for abusing it? Yeah. So another thing too was mortgage deferrals. We were able to defer our mortgages for 6 months, and whether you really needed it or not, as long as you cried wolf to the bank and you gave a good reason, then you get to defer your mortgage. Like interest rate accrual be damned. You got your extra 6 months of payments.
But a lot of people, but it's so funny, people didn't even realize, they didn't understand that interest was going to keep growing. It wasn't just, hey, you don't have to make any payments, don't worry. It's the payments are just stacking up. You now have to pay interest on that.
Yeah, it was essentially borrowing from tomorrow to pay for today. And if you follow our train of thought here, there's a lot of money that flowed in the system. At the same time, we were stuck at home. We had to, mask up, stay safe, couldn't travel, and couldn't go to restaurants and stuff. What are people spending their money on? Amazon, home fitness, renovation, and people wanted to move out, right? Go out to the suburbs. This decentralization of downtown, there's like a weird phenomenon, right? Where people didn't want to be stuck in their shoebox in the sky. So that's where all the suburbs shot up in values, and it doesn't matter where, what, things were going up 20, 30, even 30, 40% during that time.
Yeah.
And is it going to happen again? Maybe not, but
I hope we learn.
This is so recent. Like, I don't want to go through this again.
Yeah, I really hope so. What could happen here, Alex, is let's say, hey, we know that the tariffs are coming in. Now people start losing their jobs from this. What do we have to do? Either they're going to start handing money out again, or they're going to cut interest rates. Now, if
Mm-hmm.
they do both of these things, same things at the same time, that is bad news. Like they have to choose one of
It's
them.
like
They
what
can't,
happened 5 years ago again.
they can't do both. And like we said, the main thing for me is, and I think what we may differ on this, Alex, is I think if these tariffs come in, I don't see rates going up. I actually see that if this happens, like rates will go down. Now, fixed rates, different story, but like the Bank of Canada, their only control is monetary policy. And they're going to have to stimulate the country. And obviously, if we know that a lot of people are losing jobs, they're not going to be buying houses.
Yeah. I like it could happen both ways where in the beginning they drop rates drastically, but because if we're looking back at 5 years ago, just because it's so recent, what ended up happening was yes, they dropped rates, but because there's so much money in the market and all this spike in inflation, you have this fake sense of wealth. And do you even remember too? Cars were going up in value, used cars, like things on top of
But that was a
a
really
shortage of supply.
Yeah, that's the weird thing is though there was a shortage of supply at that time. Where we're not really going to be running in that scenario. Food and these other things shouldn't be increasing.
Yeah.
Our inflation went up massively because of that. After that, like all those prices stopped going up dramatically. It was then interest rates and shelter that started spiking our inflation to even make it come down, and it didn't start coming down until we dropped rates.
Yeah, so like I could follow your train of thought where to respond, we would drop interest rates and it could be pandemic level cuts. But
No,
I
I'm telling you
probably
this.
see
I
it.
really hope that. I really don't want that. I would
I
much
don't want that
rather
either,
than,
but I get yeah.
yeah,
So I'm just trying to play this out. Let's see like that
yeah.
kind of scenario. If they do
I
flood the
just,
market with
yeah.
like
I've just been,
it would be dropping, but yet I do see it where oops, we dropped it too much. Inflation spikes. Now we got to jack up rates. So they'll drop it
Exactly.
and they'll come right back up
Yeah.
like that kind of roller coaster thing.
yeah.
I'm like,
Which
just
is
don't do
where
it in
I
the first
don't.
place.
Exactly. That's what we need to see. And I think like at 4 to 3.5%, I think that is like a healthy market for interest rates.
Mm-hmm.
We figured that out. Hey, 1.5% and 2%, it's too low. It's not, it stimulated it, but it stimulated the country in the completely wrong way. And so that's where, to me, unless they would either have to put in some caps of how mortgages and home prices of, hey, let's have open bidding so there can't be bidding wars. Like I would hope they would put a lot of other things in place, but are they going to be smart enough in 5 years? I don't know.
Oh, geez. Like you think we learn our lesson, but somehow there's this new way of getting around things. Like I was looking this up and our current national debt is 1.48 trillion. So I'm no economist, but if we did this pandemic level kind of relief, this could easily bring our debt up to
Oh,
what? Over 2 trillion, could be 3.
oh. And our debt's growing because, again, they borrowed all this money when the Bank of Canada was at 0.25. So they're like, it's free money. We don't have to pay this debt back. Don't worry. It doesn't cost us anything. What did Justin Trudeau say? There was a video of him once. He's like, what are you talking about? Interest rates are 0.25. And it's, dude, you know that if you don't pay this debt back, when rates go up, you're going to have to pay it back at a higher rate.
Yeah, exactly. And we're just borrowing again just to survive. Like our country is going to go bankrupt. Like what recent country was it? A Europe country that went bankrupt? Was it Greece or Iceland or something
Well,
like that?
I think Greece at one point, I think like they changed their dollar. I think they went from whatever Greece, whatever theirs was, to the euro. I think I
Okay.
remember at one point, and that's like everything crashed there because they were changing it to the different
Okay.
currency. But I think
Yeah.
they were attacking people's banks, saying if you do not get the money out, it's only going to be worth X amount of money when
Oh,
we
so
switch
there was
over.
almost like a bank run that happened where
Yep.
everyone was
Yep.
like mass exodus. Everyone was trying to take out their money, and then almost we saw with Signature Bank and whatever
Yep.
Silver, whatever bank.
Silicon Valley.
Yeah, yeah, yeah. So I wonder how. I guess that's what would happen if a country is officially bankrupt, right? Mass hysteria, mass fear. People just wanted to get out and do whatever.
Think of when businesses start going bankrupt. Either there's two things. Either another company comes and buys them and starts selling other assets off because they can make money on that. Like companies don't mind debt if their income's high enough because they get to write it off and everything. The only thing would be is like, hey, what country is going to buy us and want to take on our debt? Like that really is.
Yeah, I know
that's
states
really
will
what it
want to
would be.
buy us. Yeah, we're all in the no thanks category. But although there
Yeah,
are some people who will be
exactly.
like, hey, yeah, we'll have better healthcare. I'm like,
Yeah.
really? Okay, so there's one thing that I want to talk about. Because we're in this situation, we need to be more productive and innovative in Canada. I
Yep.
think we're largely reliant on our resources, real estate. I guess some cities is tourism, like Vancouver, Toronto, and all that stuff. And so I did some research here. The top 5 largest companies in Canada by market cap. So I'm just going to list these off. Number 1, RBC. 2 is
Bank.
Shopify. 3, TD. 4, Enbridge. Enbridge is a oil and gas
Oil and
company.
gas. Yep.
And number 5, Brookfield Corp. I'm like, what's Brookfield Corp? So they're an investment and asset management company.
They own a lot of oil and gas as well.
Yeah. So 3 of the 5 largest companies in Canada are banks, are financial related. Now, let's compare this to the 5 largest companies in the US by market cap. Apple, Microsoft, Nvidia, Amazon, Google. What's the theme here?
Yeah.
They're essentially tech companies, or they're all innovative.
Yeah.
They produce,
yeah.
they have products that people buy, not just in the States, it's worldwide.
Yeah. What's the going back to that deep fake in China there, Alex?
DeepSeek.
The crazy thing is
DeepSeek.
So the crazy thing is, I think it was Trump. I can't remember if it was Trump or if it was Biden, but they actually put in a thing like Nvidia couldn't actually sell their information to China because they didn't want them to get access to the AI. Because everyone says, hey, whoever gets the most AI is going to be like the superpower. It's funny when you take away stuff, like if they just kept selling the stuff to Nvidia, they may have never made this company, but they were like, oh shit, we can't have the information from Nvidia. We can't buy their stuff. And so they actually designed their own thing. And that is innovation, like having that source. And I feel like this is a time when Canada can use this, be like, hey, we're going to be losing some stuff, but let's make it actually a bonus.
Yeah. And so one of the things that I've learned, I'm not sure how the oil refinery process works, but Canada, we sell our crude oil to the States because we don't refine it here. And it gets refined in the States somewhere, probably somewhere in Texas or somewhere down there.
A lot of it's in Washington. Like a lot of the stuff just goes right into Washington. And then, yeah, of course, in Texas and everything as well.
So it gets refined there. And then we buy it back from them when it's already ready to go thing. Like, why can't we just refine it in Canada? Like, you're selling at a discount, whatever, at your bulk, and then you buy it back when it's already packaged up for you. What? What kind of deal is that?
Same as the same as our our logging industry. We have all the trees, we cut all the lumber, and we send it down there so that they can mill it up, so then we can buy it. Canada used to have mills, like Vancouver Island used to have 20 different mills. There's 2 mills that run on Vancouver Island.
Oh yeah, especially where you're at in the Comox Valley. There's something there too, right?
Yeah. No, there's no. There used to be a mill there. It's not here anymore, and that's where again we've sold all of our stuff to either to U.S. or we all exported out to China, and we now don't have the power to make anything ourselves.
Do you think it's because of the green movement, where these mills and it's clear cutting, a lot of the
they still cut
protests everywhere. And all that stuff?
They still cut everywhere. We just don't mill it in our own country. All the cutting is still the same. We just don't mill it in our country anymore.
Do you think it's because it's almost like a sense of outsourcing because the mill is too expensive here and we'd have to pay workers a living wage, and because of the unions and all that stuff, it's cheaper 100%. To send it elsewhere at a lower cost and then buy it back. Like it works out for them to be cheaper than to do it here and refine it.
Yeah. And that's where we even see we've made it hard for businesses here in Canada to want to invest and want to grow because, hey, you're going to get taxed up the yin yang. You're going to have red tape. Hey, come go to the US, go anywhere else. And they breed innovation. Like you could go to the US, start a business, and they give you a loan instantly because they want to. And they make money. There's debt collection companies making the money. But it's so hard here to do anything in Canada. Even if you want to just start a business, you have to jump through all the red tape.
It reminds me of another industry that it's actually been very built. We're out here in the West Coast. Vancouver is known as Hollywood North. And why is that? It's because our government has given the film industry tax breaks to film here. And oftentimes it's more beneficial to film here than in California. And of course, we have a diverse multicultural community, so they can draw actors from here as well. So like, why can't we do that in other industries? How do we attract innovation? We have to promote it by making it, just to make it attractive for business to come and like to grow here.
Yeah, I need to make a bonus. And that's where, again, let's say if a bunch of people here, if people are going to lose jobs, it's like, let's innovate. Let's come up with other ways to use that workforce to be like, all right, we're going to start building refineries. We're going to take that workforce from there and we're going to start building our own refineries. I can tell you right now, that's not going to happen. But we will not do that. They've tried to build refineries. The cost now to build a refinery is like $3 billion. 8 years ago, I think it was like $1 billion. And so again, our cost for everything is too high. Same thing. We want clean energy. The safest form of clean energy is nuclear. That is the cleanest energy out there. But obviously it needs a lot of water. And then, hey, it can be very dangerous if obviously
Oh yeah,
the radioactive spills, but it
oh
is
yeah,
actually the cleanest. It's the cleanest energy out there.
yeah,
Once you
yeah.
actually have it, it's the cleanest energy.
Yeah, and then the whole issue about okay, what happened with Chernobyl and all that stuff.
Yep.
If there's an accident, then
Yep.
it destroys an ecosystem, and
Yep.
people have
Yep.
all this cancers that come about with
Yep.
accidents and stuff. All right, we got to move on. We talked about this in previous weeks about TD having the spotlight of getting hit with the money laundering, and at the time we're like, no one's even fired from the company. They got slapped with a $3 billion fine, but
Yep.
no heads are rolling.
Yeah.
Apparently now that they've, I guess enough public pressure has mounted and enough investor pressure. So the CEO of TD, Bharat Masrani, he is set to step down February 1st. So by the time you are listening to this pod, he stepped down already 2 months early, and COO Raymond Chund is succeeding him. And we also have Chairman Alan McGibbon will resign by year end. So basically the old guard, they're essentially cleaning house. And so this overhaul is much needed because of the scrutiny, anti-money laundering controls. And since that announcement, TD stock was up 3%.
Yeah. And I haven't looked at where their low was that way, but it's again, like they can't invest really in the US, like they're capped to like X amount of growth. They're actually trying to sell, like they have mortgages in the US, and like right now TD's trying to sell, I think it's like 50 billion of invest like mortgage, so they actually can reduce their books so they can take other investments on.
Yeah. So there's that. We have an update on the immigration being turned off. There's a new report, right? Do you want to share about that?
Yeah, it says we now only need 500,000 fewer homes needed in Canada by 2035. Now it's okay, cool. We only need 500,000 less, but we also need to build like 3 million homes. Okay, cool. We only have to build 2.5 million now. We barely even build 250,000 homes a year. So like the stat, it doesn't, to me, it doesn't really drive anything.
Oh yeah. It's like saying the demand is down because you turned off the taps for immigration. And we knew that you needed it because you needed to slow down taps. So like, oh yeah, because we turn off taps, we're not going to need this. I'm like, yeah, no kidding.
But we've already been so far behind. So it's great to say, hey, instead of 3 million homes, we only need 2.5. But we will not hit our housing targets by any means.
Yeah. So I have a little update. Since government has been prorogued, and we all know about this whole kerfuffle about the capital gains increase, that it should not be enforced by the CRA at the 2/3. The Canadian Taxpayers Federation is taking the CRA to court.
I listened to it. It was a good demonstration, just talking about everything.
Yeah, because CRA is enforcing this undemocratic and illegal, they say, capital gains hike. And this breaking news, what actually came on right before we started recording, is according to CBC, the federal government may reverse course on the capital gains hike by delaying the increase. So maybe they see the writing on the wall, this shouldn't be happening.
Yeah, it has not been approved. It did not go everything. So how can we be taking money that it's not even what's going to happen? If you guys don't approve it, how are people going to get their money back? Hey, let's just put a pause on it. And hey, depending on if it gets voted in, then turn it on.
Exactly. So by enforcing it before it was official, this created such a mess, such a gong show.
I feel like the last 2 years, I would hate to be an accountant. They've had to have so many changes that are coming in and coming out, like Bare Land Trust, people freaking out. Oh my God, everyone has to register. No, we're actually going to delay it. It's not going to happen. The capital gains hike. Okay, guys, you need to be prepared for this. You know what? Maybe we're not going to do it. And a lot of them, clients have to foot that bill, but even accounting firms, they've had to pay extra money for these things and they don't get anything from it.
Oh yeah, but like we have some accountant client or colleagues, and I'm sure they're always like, man, changes are abound, and we got to keep
Yeah,
up with this, and what does this mean,
yeah,
what's that, and how we give advice to our clients and such. So what a mess.
yeah. It's a crazy one, but that's the world we live in, and we're just here to give all the information.
Absolutely. So we have an update on the liberal leadership race, right? What's the goods on
Yeah.
that?
Andre was told he's not allowed to run. And we proved you don't have to speak French. That's in the act. You don't actually have to speak French, but his comments about not needing to speak French was very damaging. Now, the way he talked about it, I'd agree it was very damaging, but I don't think a lot of people would be all that upset. Like, other than Quebec, maybe Ontario, like, really are people going to be upset that they don't speak French?
Yeah, no, I think they have it in their mind already who they want to run. Obviously, it's Mark Carney and Chrystia Freeland.
Yep.
There's another one who's independent. I forget her name. Is it Ruby Dalla or something like that? I see on X. She's
No,
not even
haven't
a
heard.
member
Yeah.
of parliament or anything. Admittedly, I scroll X more than Alex. So
Yeah.
this is where I get my content. I'm like, oh, this is pretty good. I got to put this on the agenda. And
The Manitoban, the Manitoba's prime minister. Or not the prime minister, the premier. I've been watching him. I really like the stuff that, like how he talks. I really like him.
okay, can he just give up his premiership and go for liberal, or you need to win a riding, right? So through a by-election before that happens.
Yeah, I don't think so. He's not even talking about that. It's just the stuff. And he's talked about, hey, we need to stand for Canada. Like, we need to impose like what Trump's saying and stuff. And he is native, and just the stuff that he does, trying to help their culture, but he understands everyone else's culture. It's a nice, fresh take.
Yeah, no, definitely. We'll see. We'll see what plays out during this time of not responding to Trump's tariffs. They have time to argue amongst themselves who wants to run. No, pick me. No, pick me. No, pick me. I'm like, all the while,
that's what I don't like.
All the while our country's in trouble and no one's at the table.
And then you got Trump in the U.S. just talking about how wealthy TikTok is, and it's only wealthy if he approves it. What did he say? Like 2 billion? I can't remember. Or was it 2 trillion? I can't remember. He said, I think US should get half of that. And they're now saying Microsoft in talks to buy TikTok. And I would say for sure it's going to be an American company. Someone is going to buy it. But again, then is our free speech gone? So is it just, hey, was it actually because it's owned by China? Is that what they wanted? Because they even said, their CEO said, we'll move all of our servers to the US. We'll ensure every server is over here. They just want the power.
Folks, just heads up, if you don't want any control from China, your iPhone is made in China.
Yep.
So I don't know, is Apple the dominant smartphone, or is it Samsung? I don't know. They go, it's 50-50, one or two, whatever. Let's say half of the world's smartphones is Apple or iPhone. Are you telling people to not? Yep. Are you banning iPhones then if you don't want anything made from China?
No.
Like,
exactly. No, they're not. No, they're
not.
They're not.
Our phones are made in California. Guess what? They're manufactured in China and probably put together in California. Yeah. So
that's even in Canada. The way that it is, you can import stuff. You just have to build 51% of it to say that it was Canadian built. Everything else can be outsourced. You just have to say 51% has been done in Canada.
Oh, yeah, but you could source the products all abroad and then just assemble it here.
Yeah, exactly. That's it. It's just assemble. You don't have to design it. It's just assemble. And you can say, oh, this was manufactured in Canada.
Yeah, exactly.
Yeah.
We're coming into that time now where it's tax time, right? So we figured that both of us have to do our taxes soon. So maybe we should talk about this with the viewers and the listeners.
Yeah, I thought it'd be a good one. We're not going to do the mailbag here today. We got some questions piling up, but I thought this would be top of mind for people. For one, first-time home buyers that are trying to get into a house, investors, and business owners. And like right now, the big one is, hey, even if you're buying a house next month, you need to make sure that you use the first home savings account. I talked to someone, they have a first home savings account at a bank. And I was telling them like, oh, what have you been doing? Did you get your funds? And they're like, no, I can't do anything. And they told me I can't pull my funds. The banks are locking people in saying, hey, you can only open a first home savings account if you buy this GIC for 2 years. They're not letting you open it. That's not how the account works, people. It is just
that lawful, or they're just doing it as a way to squeeze you?
I feel like they're squeezing. I had another person that went into the bank and said, hey, I'm buying a house in a month. I just need the first home savings account. They wouldn't let him open it. I just said, okay, well, go to Wealthsimple. You can open it today. And so banks want deposits. That is how they are able to lend out more money. So the first home savings account, people, is you just have to open it. It is your tool to invest. Now, if you're looking at buying home, you don't want to invest in anything crazy, but you want the funds to inflow in there, the $8,000, so you can get a tax return. And that's the most important thing. Right now, you could still invest into your RSPs for actually 2024, again, to reduce your income. And you can pull up to 60,000 as a first-time home buyer now. And even if you've owned a home in the past, you are still a first-time home buyer, as long as you haven't lived in a principal residence for the last 4 years. And so that one, helping a guy, he's going to be getting a $30,000 tax return by investing into his first home, into the RSP.
Yeah, I believe, correct me if I'm wrong, when you put your money into your RSP and you're pulling it out as for the home buyer plan, there's a cutoff time to the funds that you can draw of it. Is it up to 90 days?
You have to wait 90
older
days. So
so if anything was deposited within the last 2 months, it doesn't apply. It doesn't account toward that total. It's 90 days and beyond, right? That was
so
put in?
you need people to plan. You can't be like, hey, I want to buy a house next month and put the money into your RSP. But if you're like, hey, I'm not going to buy for a little while, you could put the money in and you can have an accepted offer. It's just the closing date cannot be 90 days until after that date. And that's
the initial,
the first home savings account doesn't have that, which that's what I really love about it, is you just put the money in and you're good to go.
Mm-hmm. Okay. So here's some other things, like if you own other properties, or in our case, you have renters in your basement. When did you turn your home into a rental, and what percentage of your home can it be used to be written off and expense and all that stuff? Yeah. And make sure you get an appraisal just to show the highest value, so that you only pay capital gains for that amount. If you turned your home into a full rental, like the amount, like the time that you turned into a rental is when they started the clock. So assess what the value is at that time. And then by the time you do sell it, they can look at the capital gains at that moment in time.
Yeah. Because if you don't do it, they're going to look at when you purchased it, and they're like, there's a formula. It's not like, hey, you bought it at 200, you're selling it for $1 million. You don't just get that, but there's a formula of how long you've lived there in rent. 100%. If you can get an appraisal, you make a declaration saying that my home is now converted to a rental property, you're only going to pay capital gains from there.
Yeah. And at the same time, like most people's taxes are a little more complicated other than just income in this. You can try doing it yourself, but just to save money, it's probably not worth it. Hire a professional. Get an accountant to help you out can maximize to reduce your taxes and all that stuff. So we have a final one here, right?
Yeah. Another one is especially for people that are business owners. People have, as a business owner, we get a lot of benefits that other people don't. We get to control what our income is. Obviously, we have to still make the money, but we get to choose how much we pay ourselves and how many expenses we use to then pay less in taxes. That is like the big benefit of being a business owner. Owning a corporation, you get to pay less tax inside of that corporation. And so right now, like, it's a really sweet spot for people that are looking at buying a home or need to do anything. You actually could figure out, hey, right now, me and Alex are looking at people's income for 2023 and 2022 as a business owner. You have a little bit of time because you don't actually have to file your business income until May. And so that's where, does it make sense to use that income? Or, hey, file your taxes earlier and we can actually increase your 2024 income if we need it. We can say, hey, man, you increase your income by $10,000. Yes, you're going to pay a little more in taxes, but you now qualify for everything you want. My favorite thing that I've been doing the last week, Alex, I've actually been showing people how they can pay themselves less. I get to say, hey, you qualify for everything you want. You don't have to claim as much income anymore, because people have been claiming higher just to qualify for homes. And I'm like, we're good now. You don't have to do that.
Yeah. Then we show people cases where just to claim more income so you can get that best interest rate at the bank, versus if you claim less, you might not be able to qualify with the bank. We put you into alternative lenders. Yes, the interest rate is a little bit higher and there's some fees, but we worked it out. The extra interest that you're paying on this mortgage is far less than the extra taxes you would pay to get your income to a level that you can qualify with the banks. Like we threw out some examples. If you want to pay 20 grand more in tax, so you can save 5,000 in interest, versus if you went with a B lender. So we have those kind of modeling as well. And then there's differences too, like as a business owner, if you're incorporated, whether to T4 yourself or dividend myself. So I'm just speaking for myself. I'm in the middle of doing my corporate taxes. I'm choosing to dividend myself because I'm choosing not to pay CPP. And because
what, you don't want your retirement?
Nah, I don't believe in, because I'm not going to rely on the government to provide for me. So
you want to control.
It saves, exactly. So I'm saving the 7,000-8,000 a year, but doesn't mean I'm not going to pay it. Like
Exactly.
This is just from one business owner to another, folks. If you are dividending yourself, yes, you save the CPP, but put away that 7-8 grand to
You have to invest
else.
it.
Invest
exactly.
it.
If you don't invest
Either
it,
TFSA, ETF, something GIC or something. And don't think that you're just saving 8 grand a year, because when the day comes and you do retire, other employed folks who get CPP, you don't get nothing. So we as self-employed, we do get the flexibility, but yes, we also have to control, make sure that we do have a future as well. Put away that money that would have been for CPP into something else that will pay you back long term.
No, exactly.
All right. I think that wraps it up. Any closing thoughts, Shanks?
No, it's crazy times out there right now. It does feel that I know everyone was hoping 2024 was the end of the craziness. And of course, we've come into 2025 and it feels like maybe it might even be crazier. But again, take a breath. We are still all alive. We have amazing lives, and let's just take every day as it is.
Yeah. As much as we poo on our country, we are blessed to live in this country. There are people around the world that they have far less, and they're worried about their lives. They're worried about whether they can survive a war or safety, drugs, gangs, and all that stuff. So we just want to share some light that, hey, no matter how rough it is in Canada, it could be worse elsewhere. So let's be blessed and thankful for where we live in. Yes, could it be improved? By all means, but let's be nice to each other. But let's just wrap it up. On behalf of my co-host, Alex Shanks, I'm Alex Pang. Thanks for tuning in. We'll see you next time.
Talk to you later.
Now, if you enjoyed this episode, make sure to like and subscribe. If you're listening on Spotify or Apple, make sure to follow us. Please give us a 5-star rating. You can even send us an email, because we want to know what you guys want to hear about. That's what we're here for. Reach out anytime.